Morning Call, broadcasting live from the CNBC TV18 Motilal Oswal studios in Mumbai.
Good morning, hello and welcome to Bazaar Morning Call. We're coming to you live from the CNBC TV18 Motilal Oswal studios. I'm Prashant, with me, my colleagues Sonia and Nigel. Guys, hi. Good morning.
Morning.
2 days we got a bit of a let up, right? The market rallied 3 digits 2 days in a row. And then just when you need the US markets to back you up, you got a bit of a downtick. So we'll see if it's a pause, an interruption or nothing at all.
It's called an anticlimax, right? Just when you think the market has sort of recovered so much and there, bam, comes the US market downtick.
You know, but I'll tell you, it's not so bad, actually. And we'll discuss this. Actually, let's, on that note, tell you what happened, right? So yesterday's session was very good. As I said, 2 days of 100+ points of gains. We've come across above some important technical levels, which we'll get to. For example, the Nifty yesterday very comfortably took out the 40-day exponential moving average and closed above it. So that's very good news. Now, as we were saying, the question is whether last night's sell-off in the US market, the S&P, NASDAQ, 1.5%, 1.25%, proves to be a bit of an interruption in this move higher that many were thinking is just about starting. I have to say this, the dollar, it got to almost 101.5, the dollar index, and then bounced back a little bit, closed absolutely flat. Oil, it's at about 84, 85, it's not doing very much. Yields are absolutely flat at about 3.4, the US 10-year government bond yield. Apart from equities, you're not seeing any wild reactions elsewhere. We had data as well out of the US, which confirms that, all that Fed perhaps needs to do in the month of February is a 25 basis point hike. And I think now those expectations are cemented. And I'm talking about the data which came through last night. We had retail sales, we had producer price index numbers, and some more. And all of it was weak. Data is weak. The question for markets, for stock markets, it's very positive for rates. It's very positive for, the rates market. And other asset classes perhaps as well. But for stocks, what matters is nominal growth. And, the question is, can inflation be brought lower without hurting growth too much, right? Many in 2022 believed and still believe that it's not possible. There has been no instance going back 30, 40 years in the US where inflation has run this high and it's been brought under control to under 2% without causing a recession. And that is the sort of big question. Many believe it's possible. Just the right amount of slowdown, which doesn't cause any big sort of profits recession or anything. Inflation cools down and the market goes on, market carries on. And I think that's the unknowable at this point in time on which I think a lot does depend. So and of course, that's a question we continue to debate and sort of put to a lot of the experts which come on the program as well. For Nifty, coming back to the market here, on the way down, the recent low of 17,853 will be the level to watch. So perhaps you get a dip at start, we'll see. Wait and watch a little bit. The big level is still some distance away. That is the number that I'm putting out, 17,853, which is the recent swing low. On the way up, right, since the 40-day exponential moving average was crossed yesterday, two numbers, the 50% retracement and then the golden retracement, 61.8% retracement of the fall from the all-time high of 18,887 to this absolute recent low of 17,761. The 50% retracement number is 18,324. The 61.8% retracement is 18,457. Those are the two levels to watch out on the way higher from here. Those are the numbers on your screen. And it's possible we get to the 50. I would imagine that even though US markets were weak overnight, it's possible that perhaps at some point in the day, you do get a bit of a push higher, given what we've seen over the last two sessions. The Bank Nifty still needs to sort of cross its first hurdle, which is the 20-day moving average. Then it needs to get past the 40-day exponential moving average. I mean, the big number there is 42,500, 42,600. In that range, I think, is what the Bank Nifty needs to clear. On the way down, yesterday's low on the Bank Nifty, which is 42,119. And then the swing low recently, which is 41,742, will be reversal levels, which I think near term, if you're trading the market, becomes pretty important. But it's going to be an interesting session. You've got a bit of a negative backdrop, but it's not as if the market here has done very well over the last 3 weeks of 2023. It's done poorly relative to other markets. notwithstanding the last 2 days of rally. So in that sense, you've got some amount of buffer. But can we use that? Can that come into play today? That's the question. Guys, hi.
Hi. I like the way you said it's going to be an interesting session, right? I mean, I don't know if you guys have been to Disneyland, but there's this one big roller coaster, and it's just like, when you reach the peak, you get that little bit of anxiety that now there's a big drop coming. I don't know if the market is going to feel like that, but we've covered so much ground, right? I mean, the Nifty is now up, almost 400 points from the December lows. And the bulls have sort of reclaimed a lot of the lost ground. So that's the good part. Even if you look at it, a lot of the macro data, the corporate data has improved. The earnings season has been quite good. In fact, both the numbers that came through, very good numbers coming in from Persistent Systems. IndusInd Bank as well reported a strong NII growth of 18.5%, stable asset quality. For Persistent Systems, a lot of brokerages have written on how it's a beat both on the revenues as well as on the margin front. So I think the street would definitely like that. Today you have some big numbers coming through. There's HUL, there's Asian Paints, L&T Tech, Happiest Mind. But the problem really is the global handover, which was on the weaker side. So the Dow lost a significant amount of ground yesterday, over 600 points. The retail sales data was disappointing in the US. There was a weaker than expected producer price reading, and that has once again reignited recession fears. So the question we're asking is, after all this ground that the Nifty has covered, could there be selling pressure today? There's a gap down, of course. Will it be bought into? Time will tell. But there is a resistance level around the January high from where we sort of came off, 18,250 thereabouts. Let's see if the market is able to reclaim that level. The going has been good so far, but now there's a roadblock and the market has to negotiate that.
Well, that's right, Sonia, and the buy on dips thesis is going to be put to test today. And the question is, can the Nifty outperform the global indices today? And I think, yes, that could be a case actually for the Nifty to go ahead and outperform. The reason I say that is because the Nifty hasn't done as much as what the global markets have done, whether it's emerging markets or even developed markets in this year so far. The buy the dip theory, well, that's played out. And today's expiry, weekly expiry that is, and the last couple of weekly expiries, if you bought at the day's low, you got 80 to around 100 points bounce from there. So that's going to be quite interesting. So the recent evidence suggests that you get a dip, you buy it, and then in fact you'll make some money. But let's get to the couple of data points. On the flows first. The FIs yesterday, they sold yet again close to around 300 crores. But that's much lower than the average sell number that we have seen in 2023 so far, which is around 1,500 crores odd. The good part, though, is that the institutional number, well, that in yesterday's trading session came in at around 900 crores positive number, which is much better than the negative number that we've seen on an average of around 300 crores odd. There was a big short covering bounce that played out both on the Nifty as well as on the Nifty Bank. The open interest was lower, and we did see both those indices end higher. And that perfectly ties in with what the FIs do in the index future side of things. They cover 10,000 short contracts, they added 10,000 longs on, and now the short positioning from around 60%, well, it's come down to around 49%, which means some part of that short covering has played out, and now FIs are net long on the index. On the option side, they bought calls, but the bigger trigger is that they wrote more than 1 lakh puts getting into weekly expiry. And what were they writing yesterday? The 18,100, 18,050, and the 18,000 put. Just look at the 18,050 put. Well, the premium's around a 40 rupees order there. So you're counting on that level of 18,000 to 18,030. That's very, very important as a support zone for today itself. And we're likely to start off in that vicinity. It ties in with the 20 DMA as well. We're not looking at higher levels, but if in case we need to get up and going, then the 50 DMA comes into play. The Nifty Bank, every time it's gone to around 41,800 odd, it's bounced. So that's a bit of a support zone. The question is, can the bulls take it closer to around the 20 DMA odd? Short point is SGX Nifty suggesting a 90 to 100 point downtick. Risk reward could favor the bulls if that 18,000 to 18,030 does hold out. Let's see how this one plays out.
All right, we'll keep an eye. The SGX is indicating a 100-point lower, almost a 100-point lower start, but sometimes it kind of moderates as we head towards. There's still an hour to almost an hour to go for the pre-open session, so keep an eye. Well, before we start, let me tell you what's lined up here in the first half hour of the show. We'll get you updates from markets around the globe. Cameron Brand of VPFR will be joining us to tell us what data looks like. And that's the global kind of setup. Our research team will bring you CNBC TV 18's list of top 10 stocks to watch for the day. And at about 8:30, we'll have Sanjeev Bhasin of IIFL Securities to talk to us about where he sees markets from here.
All right, so let's begin the show now with some market opinion coming through. On the equity side, we have Mahesh Nandurkar of Jefferies, who says The economic indicator for December 2022 shows that year-on-year activity levels declined versus November. He says the urban data points turned mixed with some slowness in mall consumption, auto sales and property transactions. He also adds broad indicators like power, e-way bills, fuel consumption also weakened month on month. Mahesh says a pickup in rural wage growth and sustained improvement in inflation and forex are positives, and he recommends moving from urban discretionary to rural plays like staples and two-wheelers.
Well, some money market views as well. On the rupee, Parul Mithil Sinha of Standard Chartered Bank says rupee is seeing downward pressure on the dollar weakness even as higher oil prices and dollar buying by PSU banks cap the downside. She expects rupee to trade in the range of between 80.75 to 81.75 to the dollar next week with a sell on uptick bias. Meanwhile, she continues to expect that rupee will underperform in 2023 due to the still elevated trade deficit.
Okay, and on the bonds, Parul Mithil Sinha says that domestic yields trade range-bound even as the OIS slipped amidst downward pressure on global yields. She expects the 10-year benchmark bond yield to continue to trade in a range of 7.25 to 7.35. In fact, according to Parul, range-bound trade is likely to continue ahead of the budget on the 1st of Feb and the MPC on the 8th of Feb.
Well, we have a lot of stock-specific action to track for you, and we'll get to our special Top 10 segment in just a bit. We have a whole host of stocks. You have IndusInd Bank, Persistent, Oracle Financial Services, Vedanta, Oro Pharma, DRL, and Mahindra Lifespace Developers. Those are stocks on the back of positive news flow. On the flip side, you have Adani Enterprises, Shilpa Medicare, and Rallis. That are stocks that could react negatively.
Okay, all right. Cameron Brandt is now joining us. He's Director of Research at EPFR Global. Cameron, great to have you with us here. Thank you very much for your time. Emerging market ETFs, Cameron, I was looking at the data. They're getting inflows. India ETFs are also getting inflows. But when we get this daily flow number, foreign portfolio flow number, that's mostly on the negative side here in India, has been in 2023. What's going on?
What's going on is a great deal of uncertainty, but flows in general are tilting towards emerging Asia. In the fund universe, India's fund industry is benefiting from strong domestic demand. The foreign domiciled India funds, as you've just noted, aren't doing so well. But I expect that to get better in the next few weeks. We're starting to see the global emerging markets funds, the diversified ones, take in some serious money, so 2 to 3 billion a week over the past few weeks. And they're very keen on India at the moment. India was one of the markets who saw their average allocation with that group rise the most last year. So I'm expecting that number to turn a bit as we go forward.
I think that was your view the last time we spoke as well, Cameron, where you did say that GEM funds are getting a lot of money and a lot of that money is getting allocated into markets like India. Even Brazil is seeing some allocation as well. But as we head into perhaps what could be a global recession led by the US, how do you see these flows shape up? Do you see India get an outsized amount within the emerging market basket? Where does the preference lie?
Well, certainly those GEM funds, stick to them for a minute, have significantly cut their exposure to China over the past 2 years. China's gone from about a third of the average portfolio to a quarter. So you have both a China allocation and a Russia allocation that is being channeled elsewhere. And I think India is well positioned. It checks several of the boxes that are driving flows to individual markets. It has a technology story. It's part of the supply relocation story. And in relative terms, the forecast for its growth in this coming year still look pretty good relative to a lot of the alternatives.
All right. Hi, Cameron. Good morning. Could you give us a couple of numbers? What was China getting as a percentage of global equity funds, if you do have that, say 6-8 months ago? And has that allocation gone up? Because various reports indicate that China is getting a substantial amount of flows in comparison to earlier. And what has that average been in the past?
China is getting a substantial amount of flows, but they're going directly into dedicated China equity funds. There is certainly a broad sense that partly because China was held back so aggressively for so long with its zero COVID policies, that its rebound story is a no-brainer, that it will certainly happen by the second half of this year. But the positioning for that is occurring more in dedicated funds than it is in the diversified funds. So we've seen allocations to China sort of move somewhat sideways for the past few months. But as I said, at a significantly lower level than we were seeing even 18 months ago.
Cameron, you said that diversified emerging market funds have been getting a couple of $1 billion for the last several weeks. Could you give us a number? I mean, if you have that for the last, I'm assuming you have data for the first 2 weeks of this year, right?
I do. Well, let's see. I expect them in this coming week to be somewhere around the 3 billion mark, and in the last reporting period, they took in 2.8 billion. That was up from sort of around 1.5 in the last couple of weeks of. So
in aggregate this year, the data that you have is about plus 3 billion.
A little more than that. I think it's heading closer to 7 or 8 billion.
So, okay, 7 or 8?
Yeah.
Okay. And
in aggregate.
In aggregate. No, so the point is when ETFs get money, they have to deploy it, right? I mean, immediately. There's but
yes,
but these funds can, and this is passive and both kinds, right?
Yes, this is the big 10 number.
Okay. And they can, and you're saying that some of this money will start to get allocated in the coming weeks. That's what you said.
Yes. So, I think you will start to see an impact from this influx. And as you say, since a decent chunk of it is going to ETFs, that impact will be sooner rather than later.
All right.
Okay. All right, Cameron, we leave it at that. Thanks a lot for joining in and giving us a sense of which way the flows are headed. That's EPFR Global saying that a lot of the global emerging market funds and diversified funds have been keen on India, so that's where the money could flow. Let's do one thing. Let us take a quick break. On the other side of the break, our list of top 10 stocks is coming up with our entire research team. Don't go anywhere. Welcome back to Bazaar Morning Call. Well, this morning we have lots to negotiate. First up, there's going to be a gap down opening because of the weak handover from across the globe. But there are plenty of numbers, very good numbers from Persistent Systems, decent earnings from IndusInd Bank. And then, of course, you have a slew of earnings from the likes of Oracle, etc. So we'll talk about that. First up, let's go through the IndusInd Bank details. Abhishek is here to give us the fine print. Abhishek, morning.
IndusInd Bank, it's a bit of mixed set. However, records are taking place in Q3, given the fact that it's a 9th quarter of YOY as well as quarter-on-quarter growth in operating profits. So YOY, the growth is the best in last 4 quarters, and quarter-on-quarter, the growth is the best in last 12 quarters. Net interest margin is at 10-quarter high. Return ratios are one of the best that you are seeing in 4 years, with ROA best in 13 quarters and ROE at 12-quarter high. RWA to advances is declining. It's at 15-quarter low, which means that the balance sheet risk is actually reducing. Net interest income growth is one of the best that you are seeing in 11 quarters on a YOY basis, coming in at close to 18.5% YOY. And asset quality, that has also been very good, given the fact that gross NPA ratio of 2.06% is perhaps the lowest in 8 quarters and the second lowest in last 16 quarters. On the flip side, the MFI book, now that's causing some pain, given the fact that MFI gross NPA has has actually increased to 3.75% when compared to 2.9% in the previous quarter. In absolute value, the total gross NPA of the entire bank has increased by 525 crores. 51% of this has come from the MFI book alone. And in terms of disbursals, more than 8,900 crore of disbursals were done in Q3. However, just 71 crore is the increase in the AUM. So the MFI book is a worry point. PNL has beaten our poll both in terms of NII and PAT. Back to you.
All right, Abhishek, thank you very much. So meet but no beat. That's IndusInd Bank for you. Now, IT companies also reported numbers. Persistent Systems, for example, Oracle Financial Services. Rima is here with all of that. Rima, hi.
Hi, good morning. So steady and strong for Persistent Systems. It's not a big beat, but it's a good set of earnings. So dollar revenue growth at 3.44%, constant currency revenue growth at 3.5%. This is coming in at the upper end of the analyst expectations. Margins have expanded by 78 basis points quarter on quarter versus expectation of flat margins. So margins for the current quarter stand at 15.4%. The deal wins have been steady. The new deal wins in the current quarter stand at $239 million, which is higher than the average over the last couple of quarters. Attrition has declined for the fourth consecutive quarter in a row. The only thing we need to watch for is that the top client revenues have been falling down. Quarter on quarter revenues are down 12%, year on year revenues are down 43%. So there are issues that the company is facing with its top client. Oracle is the other one that we're tracking. Again, a steady set of earnings. Revenue growth 5.3% quarter on quarter. Year on year, it's a good double-digit 15% top-line growth. Margins have expanded on a sequential basis. But remember, EBITDA margins at 41.8% is lower than the margins the company used to enjoy just a couple of quarters back. But margins have expanded sequentially, and that's driving a 10% increase in the company's profitability. Back to you.
Okay, all right. Thanks a lot for that, Rima. Well, I'm tracking Vedanta. They have been declared the successful bidder for Meenakshi Energy Limited. That's under the corporate insolvency resolution process. The NCLT nod is still awaited, and the management says that by FY24, they're likely to close out. The total amount for this particular asset will be 1,440 crores odd. Out of that, only 300 crores needs to be paid upfront. The remainder will be via secured, unlisted, non-convertible debentures that were issued by Meenakshi Energy itself. Couple of numbers on that. It's very small in the entire scheme of things, but it indicates the management's focus on the power part of their business. So the total revenues of this asset was only around 200 crores odd. It's a 1,000 megawatt coal-based plant, but out of that, only around 20 to 30% is currently operational. So there'll be additional money that has to go in there. And Vedanta says that they're going to be using it as an IPP. So they'll be looking at tying up and in fact supplying power as well. So viewing it positively since they have they'll be adding their power capacity.
Okay, all right. We'll keep an eye out on Vedanta. But Adani Enterprises is in focus this morning as the company will be raising 20,000 crores via the FPO route. Vivek is here to give us the latest on that. Vivek, over to you.
Well, absolutely right. It's a very large and much anticipated, much awaited FPO that's coming. They're looking to mobilize almost 20,000 crore, like you mentioned. So the details have now come in. The issue start date, open date is on 27th of January. It will run till 31st of January, and the anchor bidding will happen on 25th of January. The issue price band, the pricing band details have come in. So the lower end of the floor price has come in at close to 3,112 rupees, and the cap price is 3,276. So now this particular upper end of the band indicates a 9% discount to yesterday's closing price. The minimum bid lot size is of 4 shares, and the money will be raised in multiple tranches. The first tranche will be 50%. So if you get allotted, you have to pay 50% upfront, and the remaining calls will happen, in subsequent tranches. What is it that the company is utilizing the funds for? Key almost 10,800 crores will be utilized for further expansion of their projects in green hydrogen in their airport business as well as greenfield expressway projects. A little over 4,000 crores will be used for debt repayment in various subsidiaries.
Okay, Vivek, thank you very much for that. Well, that's Adani Enterprises for you. Now, Aurobindo Pharma, Dr. Reddy's and Shilpa Medicare are the other names with news flow. Ekta is standing by with all of that. Ekta, hi, morning.
Morning. I'll start with Dr. Reddy's, or rather Aurobindo, where the US FDA inspected 2 of their units. They've issued 2 observations to the units, so hence it should be read positively. Dr. Reddy's, they have cut the price of a cardiac drug which is going off patent already in the Indian market. So they had bought the rights from Novartis, which is basically the patent holder. They have market share of around 32%. It will be priced at around 29 rupees for 50 mg. But remember that there are other drugs in the same molecule which are priced lower. So it's probably going to be a fierce competition. Shilpa Medicare expect red on the stock. The promoters have pledged 50 lakh shares, which turns out to be 5.7% of the total equity. As of December, the promoters held 50% stake, 1.38% was pledged.
Okay, all right. Thanks a lot for that, Ekta. Well, let's hop across to Sonal. She's joining in to tell us about news flow coming in on Rallis, their numbers, and Mahindra Life Spaces. Morning, Sonal.
Good morning, Nigel. Let me start with Rallis. Reported very weak set of numbers. It's a decline while the revenues were flat on a YOY basis to come in at 630 crore rupees. EBITDA was down 21%. Margins were down almost 200 basis points, leading to a profit decline of almost 43%. The company says that they saw weakness because of erratic rainfall in the domestic markets and also because of headwinds that they saw in the export markets. So their exports declined by 6.5% this time around. The domestic crop protection business was decent, grew around 7.7%, and crop nutrition business grew around 22%. Watching out for Tata Chemicals because in consolidated numbers, they will look for Rallis numbers as well since it's the subsidiary. Moving on, Mahindra Life Spaces, because they have won their first society redevelopment project in Mumbai. They had told us earlier that they are interested in redevelopment. It will have a potential of 500 crore rupees and the developed land will measure around 1.27 acre. That is where they'll do the redevelopment. These two stocks will be on our radar today.
Okay, thanks a lot for that, Sonal, and thanks to our entire team. In fact, let's do one thing. Let's do a quick recap of our top stocks. Stocks with positive news flow. There's IndusInd Bank, Persistent Systems, Oracle Financial Services, Vedanta, Aurobindo Pharma, Dr. Reddy's and Mahindra Life Space Developers, while stocks with negative news flow, Adani Enterprises, Shilpa Medicare and Rallis India. But let's get a quick comment on what's happening in the world of commodities. Manisha Gupta is joining in for a roundup of all the action there. Manisha, a bit of cooling off is what we're seeing after what was a frenetic rise in the past many days.
Oh, well, absolutely. $88 a barrel is what we hit in the Brent crude prices yesterday. And the U.S. crude went all the way to $82 a barrel, but a sharp decline from those kind of levels. Two reasons for that. One, you're looking at the U.S. dollar index gain up yet again, and that is putting pressure across commodities. And even as IEA and OPEC both have said that the global consumption numbers are going to rise in 2023, markets are still dealing with higher inventories. The U.S. industrial production and retail sales data has come in on the weaker side, and you still have high inflation readings from UK and European Union, and that is weighing onto the market. So not just crude, there's a sharp decline that we've seen happen in case of gold and silver prices also. The only thing that's holding firm, even now with these kind of numbers, is the metal prices. So whether it's zinc, aluminum and copper, all the three trading positive in the Asian markets.
All right, Manisha, thank you very much for that. So that's commodities, but metals still are looking good. We'll take a quick break here. Sanjeev Bhasin, director at IIFL Securities, is going to be joining in on the other side. The last time we had Sanjeev on, he was indicating that maybe there is a bit of a pullback, there is a bit of a pause which is due. We did get that pause, and the market now seems to be starting to turn up. So that's a chat which will come up. We'll also, of course, get you lots of corporate commentary coming in straight from Davos, Switzerland. So stay tuned for all of that coming back.
Welcome back. Hope you're having a good morning. Well, for starters, we have a weak global handover. So that's why the SJX is indicating that we could pull back. Will that be providing a good entry opportunity for the bulls? Well, time will tell. That buy on dip thesis is going to be put to test. But let's get chatting about the markets. Sanjeev Bhasin joins us, director at IIFL Securities. Hi, Sanjeev. Good morning. First up on the index itself. We had a bit of a correction from around that 18,700 odd. We went down to around 17,800, 17,750. Any view on the index from here on? Where do we go?
Yeah, good morning, Nigel, to you, Sonia and Prashant, and wish you all a very happy New Year and a happy Lodi. Well, India has definitely underperformed all the global indices, and that was my view, that global indices will lead the charge. Now, the US is tom-tomming about the Fed and the rate hike. As usual, the Fed members speak out of turn, so the volatility is higher. But I think India is well poised now. The only rumor and which we will know the fact is something of a change on LTCG. Otherwise, I think the results are just fine. So I think at 18,500 maybe before the budget, and then we'll take it as the event unfolds.
Okay, Sanjeev, hi, good morning. We've had actually some decent set of numbers come in from the most troubled pocket, right, which is IT. The numbers were not too bad. In fact, something like a Persistent delivered both on top line, on margins. You think this is the time to be jumping into the IT names?
Yeah, good morning. So, Sonia, you had to do that in the last 2 months. You know, when all the top hop notches like JP Morgan came and downgraded, that was the time we put money to work. We work against their consensus calls, and that's why we make money. I think IT is in fair weather. HCL Tech, you know, by the way, the IT index is up 12.5%, whereas the Nifty has corrected 4%. So it tells you the outperformance. Secondly, remember that these are cash generating stocks. They are not companies which have any debt or any baggage overhang. And we think that they are the ones which are the precursors to what the global economy is. In fact, Sonia, I can tell you after April, you'll see the biggest rally you've seen in equity globally. And IT will definitely outperform both on the rupee front and on the margin front. So I think both HCL Tech, Tech Mahindra and Persistent are three of our calls as a disclosure. But we think that basket is looking excellent. So do an ETF if you are with the market and if you missed out. But please add some of the IT names because this is the best chance you will get.
Indian IT services and, you know, maybe a NASDAQ ETF as well. And there are so many of them here. But that's the interesting call, Sanjeev. Post-April, because, you know, the 18,500, as you said, maybe before the budget, that is what, just less than 2%, right? But the bigger call is post-April. So talk a little bit more about that. I mean, because, I mean, one can start to at least prepare for that, right?
Yeah, so Prashant, look, equity in India has been an expensive outperformer, purely on the back that our retail flows are the backbone. But globally, there is a miss-out picture. You know, bond yields and the debt side has been a bit of a misnomer. But we think all that is evening out. We are of the view that the Russian-Ukraine crisis abates fully, and we think growth will be back after such a, you know, the Fed having lost credibility and come out with such high measures of rate hikes. We think April onwards, there's going to be a huge consumption rally. Don't miss the woods for the trees. Look at the way China is shaping up. And I think that 21,000, maybe by June, July is definitely on the cards on the index.
Okay, 21,000 by June, July. Wow, that's not too far away, and that's an optimistic view coming in. All right, you know what? Sanjeev, we want to just play out a few bites that we got from Davos, and there's so much in terms of opinion that we've got. Shireen caught up with Roshni Nadar Malhotra in her first interview after taking over as the HCL Tech chairperson, so that's important. Also, Wipro's executive chairman, Rishabh Premji, on how business is panning out. So I want you to listen into that, Sanjeev, and give us your thoughts. Let's just listen into those views.
Even though the last couple of years of the pandemic have been one where everybody had moved to a work from home environment, and you know, we were all taking caution on a couple of our expenditure and how the company was evolving, I think one of the things that you've seen is that for us, we've really ramped up and continue to ramp up the pyramid mix. So the number of freshers that we're hiring, and I think that's also now starting to show in the way we're improving our margins. And that's a strategic direction we want to continue taking. What we've done over the last couple of years and continue to do even now is we've opened quite a few nearshore delivery centers. So, you know, we've got Morocco, we've got Vietnam, we've got Sri Lanka. Despite, you know, the economic turmoil in Sri Lanka, there wasn't a day of billing we lost. You know, there's Mexico, there's Costa Rica. So there are many of these new centers that we're opening. So again, expanding on the nearshore delivery model is something that we're going to continue to pursue.
I find there's still uncertainty in the environment, but there's more cautious optimism, and I'm using the word more purposefully and intentionally. So that's one big change. The other thing I find is the environment, to your point, is less somber than I expected. People are more hopeful of how things will come back. People are more hopeful about the recession in the US perhaps, or the slowdown in the US being more short-lived. But the good news is deals are transacting and customers are still making strong, relevant decisions for their future. I think there's also a stronger orientation to ROI, so investments that customers have made over the last 2 years, perhaps in a certain state of euphoria, customers are now demanding and saying, look, how do I make sure that I get returns for that investment. So there's a huge focus on optimization. Quite optimistic and excited as I look at our pipeline, I look at our own structure, I look at our own settling organization, I look at the momentum we have seen over the last 24 to 30 months. I think we have a strong, well-settled team that is very much focused on the market and transacting and seeing stuff happen in the market.
You know, you talked about attrition coming down, and that has been the case as far as your peers are concerned as well. But what about hiring, especially given the fact that there is some degree of uncertainty, even though you are cautiously optimistic, but you continue to be uncertain about the environment?
Yeah, look, when attrition comes down, your hiring by design slows a little bit. Attrition has come down quite dramatically, right? We're at 17.5% on a quarterly annualized number, which is dramatically less, 360 basis points less than last quarter. I think it'll temper even further as we move into Q4. You know, Europe is doing well for us. It's been an area we've invested very purposefully over the last few years. If I look at our pipeline in Europe, I'm very excited about that. There are pockets.
That's interesting because Rajesh said that that's the one pocket that they're most concerned about.
So as I was saying, it's very interesting. The dynamic is different for different organizations based on the way their portfolio is unfolding. Our pipeline is healthy. If I look at the large deals in the pipeline, they seem healthy.
Okay, pipeline is healthy, but environment is still a bit uncertain. Sanjeev, you like HCLTech. What did you make of the commentary? And you know, the fact that despite all the challenges, they sort of maintained their FY23 revenue guidance. Of course, mid-quarter, they had to sort of scale it down a bit. But overall, are you optimistic here? Do you think that perhaps this is a good time to be buying in?
So Sonia, I am very, very optimistic. And by the way, I am not missing Davos at all. And if you are, you should catch the flight to Delhi. It's close to 2 degrees. I was in Vaishno Devi last week. It was 1 degree. I'm headed to Amritsar on the 27th, where again there is 2 degrees. So I am loving this. I mean, I love my India and I don't care about Davos, A. B, HCLTech is my top holding and I will not sell it for 1,500 rupees by Diwali. It is an outperformer. Secondly, Sonia, everyone talked of, the winter coming and Russia's gas and everyone freezing to death in Europe. Nothing has happened. Gas has hit a 3-year low. And I think Europe, which was the ugly duckling, has rebounded very, very sharply. So the ugly duckling remains Jeremy Powell and the Fed and the members who speak out of turn. I think Europe is going to lead the charge. China follows and India will be one of the, not a laggard, but an outperformer. So HCLTech is our top holding. We continue to be very, very positive. We added it at 950 when it was all dismal. And we think that 1,500 is coming by this Diwali. And you're most welcome to join me at Amritsar at 2 degrees. You can go to the Golden Temple and the Wagah border.
I'm happy in the summer. I'm more a summer person than a winter person, but I'm sure you're feeling a little bit of FOMO. I mean, look at the stunning locales in Davos, you know. There's a little bit of FOMO that all of us are feeling. But Prashant has been to Davos, by the way. I haven't, but Nigel and me haven't. So, Prashant?
I'm happy with...
sitting here in Bombay.
You know, I'll tell you what, right? I mean, as a journalist, to go to Davos, it's... you hit the ground and it's... I mean, it's not as if you're flying in on private planes and, waltzing around and, walking in with... I mean, it's a lot of work, guys. I mean, I've been there, I think 3 years, but it's...
It looks rosy, but it isn't.
It isn't. I mean, it's a lot of work. So, yeah, I mean, I agree with Sanjeev, right? Amritsar and the food, Sanjeev, I mean, that's...
You're missing the woods for the trees. If you don't see if you don't see a Delhi winter, then you haven't seen anything, Sonia. And Amritsar is to live for, it's to believe. Firstly, the Golden Temple, the Wagah border, and the kulchas you have never had in your life. Plus, if you are a non-veg, the best pomfret fish ever.
No, I agree with Sanjeev. As someone who grew up in Delhi, I can attest to it. I mean, absolutely, no questions. Sanjeev, go on. Sorry.
Yeah, so I was just telling you, I was in Vaishno Devi on Wednesday, Thursday, I was in Jagannath Puri, where the World Cup hockey is taking place and not getting any center stage. It's a big event. You should see how Bhubaneswar and Rourkela have turned around. I mean, Odisha is going to be the dark horse as far as energy, as far as the economy goes. People are laughing their way to the bank. So you can imagine what the length and breadth of India itself offers. And I have no clues about missing out on the Davos. I would not go there. I mean, if I got the opportunity, but I am happier in my India and I'm very, very happy. If you people would like to accompany me to Amritsar, it will be a pleasure.
All right, and the World Cup, you're taking on Wales, I think, today. Let's hope India's campaign goes well. And those grounds, I agree with you, Sanjeev. I used to play hockey when I was growing up, and super world-class facilities in Odisha. But let's talk about the markets. Any particular stock that you want to throw to us, something not run-of-the-mill, not the banking names, maybe not the IT names, but something special that you would like to, tell our viewers, something new.
Yeah, so look, Bajaj Finance came out with guidance or numbers which showed slight bit of weakness in the best season. But what you missed is that they've added the maximum amount of retail inflows as far as AUM goes. I think this is the time, and I had some inkling of a conversation with Sanjeev Bajaj, and the next step would be by the budget to get a banking license. I think both the Bajaj twins will come out with the best numbers ever in history they've reported on the end of this month. This is the time to put your money. If you've been waiting to buy the best stocks over the last 20 years and you are looking for a cause, this is the time. Do a sip in both the Bajaj twins. When there is bad news and there is price, you will get the opportunity. Secondly, a dark horse here is Vodafone Idea. Look, everything is priced in as far as the debt and all. The government is clear. Once you have 10 rupees, they will convert their debt into equity. The company is not going to let loose. They are going to definitely stand by it. There is a 12.5 rupee in which they have options to be exercised. I think as a dark horse, 7 can become 10. Now, if you're looking to make money, there is risk and reward.
Okay, all right, Sanjeev, it was a pleasure speaking with you as always, and we will see you next in Amritsar, hopefully, to eat those kulchas. So thanks a lot for that invitation, by the way. It's very kind of you to, always extend such warm invites to us. Of course, when we get the time, we will make that trip happen, definitely. Thanks a lot for joining in. Okay, well, that's the word coming in on the markets and on individual stocks. Let's take a break. Before we do that, let's tell you what's lined up in the next 1 hour or half an hour of the show. Anuj will be joining us for a quick trade setup in just a bit. Post that, we'll bring you the top stock picks of the day from our technical experts, our F&O expert joining in as well. After that, Prashant will bring you the Market Laser segment where we analyze stocks and sectors through a technical lens. And before the market opens, we have our stocks board, so we'll highlight the top stocks in the news to focus on for the day.
Okay, welcome back. 10 minutes to go for the pre-open session. Anuj is here in the studios, and we're going to talk about markets and what he's watching out for. Anuj, hi, morning.
Morning, Prashant. So, make or break zone for the market, really at a bit of a crossroad. Weekly expiry, of course, today, so there could be some volatility. But the follow-up yesterday after the first hour sort of indecision, I think was really good in the market, both Nifty and Bank Nifty, and especially the way HDFC Bank has moved up over the last few days. Moving within 5% of 52-week high, showing some signs of leadership. In fact, taking back some space from ICICI Bank with 4% gain versus 1% for ICICI Bank. I think that's very interesting. The other thing is very important consumption numbers today. Asian Paints and Hindustan Unilever. I think that will also have ramifications for the market. On the Nifty, there's been very heavy put writing, but no major call writing. So my sense is that if anyone can get stuck, it's put writers and not call writers. If that happens, especially around the 18,150, 18,100 mark, then I think the market could fall a bit, especially considering that we are again opening at the 20-day exponential moving average of 18,090 or thereabout. The sell-on rally texture as of now is intact as long as the Nifty is not closing above 18,200. Above 18,200, I think there's a fresh expansion. On the Bank Nifty, I'll keep an eye on HDFC Bank because that really has altered the texture of the index. It's still relatively weak though. And its 20-day exponential moving average is still placed about 100 points higher at 42,581. There's been significant build-up at 42,500 call. So my sense is this 42,600, 42,650 zone would be a tough zone for Bank Nifty to take out. And if it's able to take that out, say 42,641, then I think you'll have a massive short covering rally. But again, that's not my base case. But that's the number that I'll keep on my radar.
Thanks a lot, Anuj, for that. Have a good day. Well, for now, we have about 10 minutes left for the pre-opening rates to kick in. Sudarshan Sukhani and Mitesh Thakkar are with us. Gentlemen, morning to both of you. Sudarshan, what's the sense you're getting? This, the Nifty has now covered quite a bit of ground, right? I mean, it's up 400 points from the December lows. You think there's more money to be made on the upside, or could there be a roadblock because of the weak global handover?
Good morning, Sonia. I would say there's more money to be made on the upside. See, the Nifty has rallied 400 points in the last 5-6 days. So even without, say, weak US markets overnight, there was a chance that the Nifty would go through a minor dip. I mean, the markets are, or no indices are going to go up relentlessly day after day. So after a 400-point rally, a reasonable thought would be that we might see a pause, we might see a sideways action and some kind of a dip. So I would classify the expected weak open today to be that dip, not a change of trend. The short-term trend remains intact. So this weakness in the market is a buying opportunity. Now the stops are wide. The stops are 17,800, which is the point at which, everything changes. So traders have to judge whether they are prepared to take those stops. They may adjust and determine their own stop losses for intraday trading. But this is not a time to go short. Either you are long or you are doing nothing.
Okay, got it. So, I mean, a dip, but no change in trend. And the idea is to buy the dip when it occurs. Gentlemen, good morning. Mitesh, what's your sense?
Morning, Prashant. So, we've been calling for this pullback rally to extend to about 18,250 levels. And yesterday, I think we had a good move. Today, I think we will open about 70, 80, maybe 90 points gap down. And for me, I think, that will be a buying opportunity. I think now, as long as we don't see a break below 18,000, I think I'll say a short-term view will be positive. And therefore, 80, 90 point gap down would be a good buying opportunity around 18,050, 60 levels with a stop below 18,000. And again, 18,150 remains the first target pivot, and then 18,250 is what I'm eventually looking at. So in that sense, this dip I would use as a buying opportunity. Even on the stock side, we will explore more of long positions.
Okay, more of long positions, and tell us what are you looking to buy or sell. And I just wanted your thoughts also on two stocks, Asian Paints and HUL, both come out with numbers today. Would you take that bet and go long on either, Mitesh?
See, I think Asian Paints is something which I've been liking. The stock was a recommendation yesterday along with Berger Paints. Very oversold, and therefore I think a good chance that we will eventually see the stock rally. My targets for the stock in the near term is about 3,000 to begin with, and then possibly 3,035.40 on the upside. HUL has been doing very well, in fact, but I think the bigger breakout will happen once it starts getting past 27, 40, 50 zone. I think in the last 8 months, we've had 3 or 4 highs around that level on a weekly basis, not managing to break past that. So only I think about 27, 50 right and positive.
Okay. All right, Sudarshan, what would your trades be, stock specific?
Well, I'm also more on the long side. BHL is a buying opportunity. The stock has been moving sideways, and there is a possibility that just before the budget, we may see a lot of gains in PSU public sector undertakings. So, worth buying with a stop under 78. The charts are good enough. ICICI General Insurance, ICICI GI, is an intraday short. There was a big decline yesterday. That decline could continue. So, sell. It's only an intraday short with a stop above 1235. Petronet is a buy. The stock is in a strong uptrend. It's outperforming the index. It has very favorable momentum. That's a buy with a stop under 216. And Ambuja Cement has gone through a deep decline. I think cement stocks may be now willing to stop, pause, build a base and go up. So Ambuja is a buy with a stop under 513.
Okay, what about you, Mitesh? What's on your list?
For me, I have 3 buys and a sell. On the buying side is L&T. It was a top call yesterday. Did very well. So if you get a mild dip today around 22.50, let's say, that's a fresh buy with a stop at 22.25 for a target of around 2300 to about 23.10. Steel Authority had a breakout. That's a buy. I would recommend a stop just below 89 and a target of around 96 in the short term. And the third call is Jubilant Foods, extremely oversold and needs a reversal. So if it starts getting past yesterday's high of 506, buy then with a stop at 499.5 for targets of 520. And one sell call, I think the PSU banks are now looking slightly weak. So BOP is a sell with a stop at 181.5 for a target of around 170.
All right. Thanks, gentlemen, for that. We'll take a quick commercial break. On the other side, we will have Harshit Kapadia of Elara Capital to put focus on the capital goods and consumer durable companies. Stay with us.